Hello traders, welcome to Polaris Trading Group PTG University Educational Workshop Series. And today we're going to do a short video entitled Combining Premiums with Number Bars. And we'll be looking at trade from June 19th. And the chart type we'll be looking at will be a 1500 tick and a 6 tick reversal footprint chart. So from the two charts that you see here on the left hand side, we have a 1500 S&P E-mini, traditional looking 1500 tick chart with a volume profile, CCI indicator down below, and we have some CCI indications here on our crossover system in the red and yellow white arrows there. On the right hand side is the Sierra chart number bars, also referred to as a footprint chart, where we can see the actual trade volume within the specific price points and the imbalances that show up. So first thing we want to take a look at here is on the left side, we want to observe a few things. Number one, price structure is below the 5-minute opening range rotation midpoint, which is the cyan line, and you can see that corresponding here on the right hand chart as well. Number two, price is below the 1500 bear ATR structure line, which is that magenta line, as well as under the 4500 bear ATR structure line. So what this, and as well the volume trend for the day. So when you add those up and stack those together, the condition in price is one of weakness. So with that backdrop in mind, we're going to be simply focusing on taking premium type setups on retracements. Okay. Also, you'll see here there's one premium that had set up a little bit earlier in the session at the 2111s, and then price proceeds to break down further through the 2108-09 level, found a little short-term base, and then attempted a bounce back. So this is where we're going to be wanting to take a greater focus on. So again, the backdrop of the market is weak, and we're looking for retracements or bounces upwards that show signs of failure or at premium level conditions, of which we can enter a short trade upon the reversal in price or an imbalance in price to get on board what is potentially lower prices that the market is advertising. So on the indicator down below here, you'll see where we get a little bit of a bounce. The oscillator moves above the plus 100 line, so that puts us into premium territory. As a matter of fact, it got right up to the just shy of the 200 extreme. So this is a very good position in terms of a setup for us to look for a premium. Now, as you can see here, I'll highlight the premium there in the chart, but what I'll also do is show you on this move down, okay, down to these lows, that's what corresponds to this move here, okay, and then as I mentioned, price began to base out a little bit here, so we'll just advance the chart a touch. Okay, so this is what that basing look like in terms of the number bars. But keep in mind, what we are looking for is a bounce for which we can look for a premium to look for a short trade. So as what starts here on this bounce from these lows, a little bounce back up, and that's what corresponds to that arrow up there to the premium. So up here at the 2108s, you can see on the number bars, price stalled right there at the 2108.50s. Now, what I want you to make note of here is the imbalance, the sell imbalance. So again, a sell imbalance here on the volume is read diagonally, and 2,030 contracts on the bid side traded versus 932 contracts on the ask side of the market. So that tells us that's what's called a sell imbalance, and the sellers now at that price point have entered back into the market fairly aggressively. Now there was some two-sided trade here at these price points, but the buyers that pushed it up here are in fact getting filled, and the sellers are getting much more aggressive. So what we want to look for, since we're in premium territory, we want to look for the reversal. So now there's a couple ways that we're going to be identifying this. Number one, traditionally we're going to be looking for that premium alert bar, and that's that white reference bar along with those associated arrows. So we're going to be looking for a price point from which to use the right side pivot rule. Remember, the right side pivot rule is once the pivot is formed, the high point, and it starts moving back down, that's the point of which we want to look to enter the price. So whether you're using a traditional bar chart here on the left or the number bar style chart that corresponds to that same price point, again, using the number bars can be a helpful aid for those that are interested in using it to help confirm what they're seeing in the price structure bar chart itself. So what we're looking for here is once price put in its high, we're looking for that reversal back down. So we're going to use a 6-tick reversal chart. So we just simply count off the high, and this does it automatically for us, but just to do this manually here. So off the high you count 1, 2, 3, 4, 5, 6. So this would be the 6-tick reversal price from which the column shifts to the right. Now, in effect, that is our right side pivot rule using the number bars. So effectively what you have here is you have a move up, a high peak, a reversal back down, forms a pivot very similar to the one you see on here on the left. And additionally, you're also starting to see more imbalances. Now there was a small slight buy imbalance versus the bid there, but what we are looking for is we're actually looking for additional selling, more aggressive selling, and you start seeing it come in here around the 21.0750s, 07 quarters. Okay, and as you can see at that point we can start looking to initiate a short position, and then the final break of which you would want to enter a trade is at the break of the 21.0650s. Okay, that's the break of this lower price of the prior column. So if you sold initiating a position about the 21.07s to 0750s, you want to be adding to your position in the 21.06s. That starts accelerating the move down, and then ultimately as these other price points were violated, all right, at the 21.05s, price again began to accelerate significantly to the downside. So we want to be looking to sell premium in the context of a developing down move or weakness, but on the shallow bounces, once it pivots, use right side pivot rule, enter the trade, stop goes above initially above the prior column, and then as price is beginning to work in your favor, you can then move your stop lower, all right, to trail, reducing your overall risk in the position, and then you start managing your trade, getting risk-free and looking for additional profit. So this is an example of a premium in a weakening condition. Everything aligned up very well, using the number bars to help confirm, enter, and pinpoint very specifically, and then also management of the trade. So I hope this helps, and we'll see everybody at the next video up tip.